Hey everyone, I just wanted to make a quick video in regards to back testing versus taking real life trades. I don't know about you, but how many times did you find yourself taking in a demo trade, for example, or you're back testing, and let's say you have an entry that's like this tight, for example, and you see price dip into it, but not really hit your stop loss and then take off, and then you tell yourself, hey, you know what, this trade is valid, it's a win. My strategy is profitable because it didn't hit the stop loss. Well, I'm here to tell you that that's not usually the case in terms of live trading, because again, spreads are very volatile. They move depending on whether there's news, whether it's pre-market. So that's always something that you should be considering before placing in a live trade, because again, although in a theoretical way this trade is valid and it's a winner, in a real world example, this trade actually could have stopped you out. And as a matter of fact, that is something that happened to me as I was taking on the FTMO challenge. So today what I'm going to be doing is going over a trade that had the perfect setup, had the perfect intention, but at the end it was all just a stop out. And quite frankly, I'm a little bit upset and embarrassed of me making a video like this, because everyone wants to show off their winners, but every now and then you have to be transparent and show off your losers as well. So let's go over the charts and I'll show you what it is that I was looking. So as you can see here, for our daily buys, what we have here is a market maker buy model still being under construction. So as you can see here, we have the 3-bar pattern, 1 2 3, are yet to be broken out of. So I'm gonna make this my swing low for now. And what I would like to see is have cause for price to keep continuing to perform higher prices. For the time being, since this is what we have, that's what we can work with. We'll see here on the 8 hours something similar as well. See, we have the bodies here of these candles creating this swing low. And as you can see, in the 4 hour, something similar happened as well. We had the bodies of these create a swing low. So, and then look what ended up happening moments after. Price started to sell off because again, the market maker buy model was complete. This fourth candle is what broke through these three, right, which was our swing low. So now, after the buy model completes, we're in premium. We want to sell that. We want to sell that to discount, and that's what ends up happening. If you take a 50% range of this, you'll see that price took it down to discount, only to then buy it back at cheap and then bring it back up to premium prices. And because this is a confirmed swing low, I like to mark it down as confirmed liquidity. So, okay, so this is the 45-minute, and this is what I was seeing. We were seeing another confirmed swing low. So we have the bodies here, 1 2 3, being broken out of by this candle. So I'm gonna label this down. Oh yeah, and because it's a swing low, want to confirm it, right? So I'm gonna be marking it down. Last liquidity. We take the premium discount for now, right? I'm not saying this is the confirmed high. I'm just saying that for the time being, I'm going to be treating this as premium prices, and I would like for price to react off something down here in discount, right? We have OBs, imbalances, buy side liquidities, orders like waiting there, and then we'll see if there's a fractal, take it up for higher prices. So here we go. Now we're waiting for our swing high, right? And we need the 3-bar pattern again. So we need low, high, lower high, where's our lower low, so that we can confirm this. Not there yet, right? So we wait. Now this gets more interesting, right? Now it's 910. Okay, you saw that? So now here we have our swing high. You saw how there was a body here? So I'm gonna confirm that as our market maker sell model complete. And because, as you'll see soon enough, there's an actual point of interest there that I want you to take. So if we look even closer, as this 10-minute body completes itself, we're going to see here that there's a 6-minute fair value gap along with a 30-second swing low. So what do we know about swing lows? Is that it has liquidity. When price taps in, and what I like to do is have two points of interest combined, so that we have major confluence that price wants to react of this area in particular. And since we've just completed this higher time frame market maker sell model, we're expecting for buys very soon because we're completing it at discount. So not to mention, not only are we finishing on discount on this particular model, but in the higher time frame as well, we are also on discount in terms of this swing low that was created. So, right, and because I was very eager, and because price is always fractal, I'd like to see what kind of reaction we're going to get here for the time being. Now, mind you, it's 9:24, market's about to open. I'm just waiting to see what is it the price wants to get at me. And then boom, this happened. And this is what I'd like to see, right? A fractal. So what do we have? We have liquidity here that was taken out of. Initiate out from with institutional sponsorship. Look familiar? Exactly. So that was my entry. So here we have our OP right here as well. And where's our fair value gap? Remember, we want to buy cheap. So cheap is right here. Now this is where mistakes can occur. So as I've said before earlier in the video, although in practice it does seem good that sometimes our price doesn't really exactly reach our stop loss, so we consider it a win. But when you're trading live markets in a real life account, the game is completely different. The spread for that was like 220 points. My stop loss was like 79. I thought I had enough, but I completely forgot about a rule. Yes, I forget my rules during live trading, where I usually like to take the spread of my broker's account and multiply it by 5. So really, I should have been having a stop loss of about 1020, something like that, in order to compensate for the spread. But because I guess I was greedy, I was in the moment, and to be honest, I was kind of impatient to just get in on something. So we compare this to the 30 seconds here. We haven't really completed the eye. There we go. That's what I want to see. So you'll see that in the 10 seconds, that was our high. We dip into discount, get into the fair value gap imbalance, and then as soon as I saw something good come out of it, I was still in the trade. Just waiting for it. There you go. This was it. This candle right here. Yep, this was the candle that stopped me out. And look how much space there was, right? From here to here, I was still stopped out. And that's the kind of reality of trading that no one really wants to tell you, right? That, if I was back testing and I did this, I would have been like, oh, you know what? This trade is a winner. Totally. I could have less of a stop loss. But in reality is, you got to take in consideration the live market and your live broker spread, because this is what's going to happen to you, right? Moves like this are going to stop you out, stop me out. And if you're risking, 1%, 2%, that's quite a chunk, Ideally, if I had the ideal stop loss, right, and I follow my rules, ideally my stop loss should have been here. And where could have I been aiming? Could have been aiming for these highs, these highs, these highs, right? Because there's buy side liquidity there. There's people waiting there with their buy stops to take it for higher prices. And as you'll see, market opens, and we have this kind of reaction. And we're off to the races. I'm meeting up to the high of this liquidity. If you're like me, we don't want to be in the market for too long. You just want to get in, get out, get your money. This trade you could have risked maybe 2%, 3%. If you know exactly what you're doing, 4 or 5. This would have been a good week. Like just this trade alone would have been the carrier. But yeah, nonetheless, lesson learned. Again, I'm not very happy of making this video for myself, because I know that this is something that's just like 101 for me. I should have been putting in more points as a stop loss. Instead, greed got the best of me, and I thought I could get away with 79 points rather than my ideal 120, because again, spreads that can really mess you up, especially if you're dealing with second ranges. So yeah, that was the trade for today that I wanted to show you. Just because it didn't touch your stop loss while you were back testing, it's not gonna stop you out when you're trading real life money. I hope you get the gist of it. This is what I wanted to show you today. Let me know what you think down in the comments. I still have much to learn, but I think I have something now. All right, that's all I want to show you today. Good luck trading. But yeah, for the time being, this is it. This is all I wanted to show you. You have a good day. Yeah, and I'll catch you in the next one.